Hello traders, so we are just a day ahead of the release of the core PCE inflation index, which the Fed closely monitors to decide on interest rates. So the data might provide us with more evidence about whether there will be more 50 basis points rate cuts in the coming meetings, or whether the Fed will just use a normal 25 basis points rate cuts to continue its easing cycle. So at this video I have a couple of notes for you for gold, pound dollar and dollar yen, which might face volatility on the back of the data release tomorrow. And starting first with gold, gold had an impressive rally recently. It managed to print another all-time high at 2,670 yesterday, closing marginally above the upper band of this bullish channel, which is currently acting as support around the 2,650 level. So if that base holds, if the price manages to hold above this bullish pattern, we may see another advance probably towards the 2,700 level, and then above that another impressive rally could follow towards the 2,800 level, where this dashed resistance line, which connects the highs from 2023 and 2024, is placed. Well, another interesting thing here in this chart is that gold seems to be following an Elliott wave pattern. It completed a 5-wave bullish pattern followed by an ABC correction over here. And according to this theory, this pattern is expected to continue. So far we have we saw gold completing wave 1 and then wave 2, and it seems that wave 3 is currently in progress. And what remains to be seen is whether wave 3 will continue towards this dash trend line at this dash resistance line at 2,800. Well, if you look at the technical indicators, well, both the RSI and the stochastic oscillators are within the overbought zone, so there's a chance for a downside correction, an increasing chance of a downside correction. So gold will need strong buying in order to reach the 2,800 level. Nevertheless, if we see close below, back below the 2,650 level and back within this channel, I expect a decline towards the 2,530 and 2,550 region, where the lower band of this bullish channel and the 20-day moving average are both located here. Then below that, if the price fails to rebound here, then the next stop could be around the 50-day moving average, which is currently close to this support trend line over here. And then lower than that, below the 2,465 and 2,490 region, where this almost flat constraining line is located, then if the decline continues below that region, we may reach the 2,425 territory. This is where the price faced resistance a couple of times during this year, so failure to hold here could worsen the short-term outlook, could send the price below its previous highs, and therefore increase concerns about a bearish trend reversal. Now looking at pound dollar, this is another uptrending market. However, unlike gold, it couldn't close above this resistance line over here coming from May 2024. It dropped lower and it's currently trying to close above the 1.3350 region, which was previously a resistance territory. And it seems that we have a bearish engulfing candlestick pattern over here. The price closed below the closing price of the previous day, so there's a chance for a bearish correction, which I wouldn't rule out given the overbought signals coming from the RSI, the stochastics indicators down here. So if yesterday's declines continue, and also drops below the August high near 1.3265, then we may see another test near the 20-day moving average and this short-term support trend line coming from August 8th. This area is near 1.32. Slightly below that, there is another trend line that may attract attention, this long-term trend line, which has been connecting previous highs, which is currently seen at 1.3120. If that fails to hold, then I expect expect another bearish correction towards the 1.3012 territory, where the 50-day moving average is currently located. Now, if the price manages to pierce through this resistance line at 1.30, probably we may see another advance, a new higher high near 1.36, and then above that, the 1.37 territory might attract attention, as this is where the price peaked back in 2022. And finally, looking at dollar yen, unlike gold and pound dollar, dollar yen has been in a downtrend. It started a new recovery phase recently and is currently trying to close above the 145.20 region, where this constraining ascending line from 2023 is located. It's also pushing for a close above this short-term bearish channel. So if it manages to do that, that could be an encouraging sign for a continuation higher, probably towards the 146.50 level, where the 50-day exponential moving average is located. Higher than that, we may see a sharp increase up to 149.77, 150.70 region, where the 200-day exponential moving average and this support trend line from January 2023 is located. Once, of course, we surpass the 148.60 region, which coincides with a 38.2% Fibonacci mark. Now, in case the price pulls lower, falling below 144.50, and more importantly, beneath its 20-day exponential moving average, currently seen around 143.70, I expect a sharp decline towards the 140.35 region. This is where the 61.8% Fibonacci level is placed, as well as this support trend line from March 2024. If we fail to hold here, the sell-off may continue towards the lower band of this short-term bearish channel near 138, or even lower to test the 136.4, the 137 constraining trend line zone. If that proves a fragile place to rebound, then the decline could stretch towards the 134.40 region, where the 78.6% Fibonacci mark as well is located. That was also a former constraining zone, so that could be another key region to watch. So that's everything I wanted to share with you guys. Thank you for watching, and see you next time. Bye bye for now.